Well, days after a closed-door meeting at the White House, Federal Reserve Chair Jerome Powell set to speak at a Fed event today at 1 p.m. Eastern ahead of a week chock full of economic data. Powell's comments coming after Fed Governor Gus Faucher said he could support rate cuts later this year, provided inflation continues its path towards 2% and the labor market stays solid. I want to bring in Gus Faucher, PNC Financial Services Group's chief economist. Gus, great to have you here this morning. Talk to me about your view on the status of the current labor market, because we have had some sources telling us that there were cracks in the labor market even before these tariffs were another form of uncertainty impacting the economy.
Yeah, we had seen softer job growth in 2024 and so far in 2025, but the labor market remains in good shape. Unemployment rate is 4.2%. Job growth this year has been slowing, but that's consistent with growth in the labor force. And then initial claims for unemployment insurance remain low. We've had a couple of weeks that were a little bit higher, but we haven't seen a consistent increase. So I would expect to see job growth sometime for May of about 140,000 when we get the jobs report on Friday. Unemployment rate of about 4.2%, staying where it was in April, March and April. And so I think that, generally the labor market looks to be pretty solid.
And what about wage growth in correlation to what we're still seeing in inflation prints, Gus?
Wage growth has been slowing as job growth has eased. That's good news from an inflation perspective. It's bad news from a consumer perspective, right? So if wage growth is slowing at the same time prices are increasing because of tariffs, and that is going to be a drag on consumer spending. But from an inflationary aspect, that's good news. And I think wage growth is slowing to a pace that the Fed thinks is more consistent with their 2% inflation objective.
Do you think that inflation is slowing towards that 2% goal still?
Well, it was. I don't think it's going to. I think we're going to reverse some of that progress in the near term as higher tariffs make their way into the CPI and into the PCE price index. I think we will see higher inflation in the near term. The question is this a permanent increase in inflation like Governor Waller was talking about, or is this just, or I'm sorry, or is it a one-time thing, which I think is what Governor Waller was talking about? And the Fed is going to wait and see on that. They want to see do we think that the inflationary impacts of tariffs are going to just fade away after a few months, or are they going to last more for a longer period of time, in which case rate cuts are on hold, into late 2025 or into 2026.
Gus, you mentioned Waller. Waller's looking for cuts later this year. What do you think?
It is highly variable. It depends on how the inflation data come in. It depends on how the job market data come in. If we see a temporary increase in inflation, but then towards the fall we see that the monthly inflation numbers are slowing, then that would support rate cuts. I think the more likely outcome is that things are inconclusive and that we probably don't see rate cuts until late in 2025 or perhaps in early 2026.
And to that point, too, we've seen consumer spending continue to be resilient over the last few years amid concerns about inflation. What data point do you think is the best for us to be monitoring to suss out if or when that consumer spending may start to finally take a crack?
It's the monthly retail sales numbers, which give us a pretty good indication of where consumer spending is going. And in particular, we're going to be looking at forms of more discretionary consumer spending. Are consumers spending more on restaurant meals, or do they feel stretched and so they're cutting back on those? What's going on with big ticket purchases, housing related items and so forth? If people are getting nervous, then that's where they're going to cut back. So it's those types of discretionary big ticket items, I think, that we're going to be paying the closest attention to.
Gus, I wonder, with all the different movements and headlines that are coming in around geopolitical tensions, especially as related to negotiations, what most notably should consumers be looking for to really understand when we do get a deal on any front, whether or not it's a good deal and one that should erase or mitigate some of their own concerns longer term?
I think it is a question of what's the effective tariff rate? And your earlier guest was talking about this. What are tariffs a month from now when we perhaps have a little more clarity relative to where they were at the beginning of 2025. I think, kind of try to ignore all the day-to-day stuff that goes up and down. But are tariffs substantially higher a month from now than they were before all of this? that is going to be, if they are, then that's a tax increase on consumers. That's going to be a drag on their spending. And that means trouble for the economy in the second half of 2025 as consumers adjust to those higher prices.
Gus, what's the probability of a deal before, and we have a month essentially until we reach the 90-day run out of the Liberation Day or post-Liberation Day pause?
I would say it's probably about 50-50, and a lot of it depends on what happens with the court case that we had last week that invalidated the tariffs, but then there was a stay on that. So do other nations decide that that gives them a little more leverage, and so they can push for a harder deal, and the Trump administration says, no, we're not going to agree to that. So, the 50-50, but I think things could change very quickly as they have been throughout this entire process.
Gus, thanks so much for taking the time this morning.
Thank you.